Okay, wait, gentlemen, let's start. Okay, so I'm here today with my brother, Joshua. We more affectionately know him by his real name, Kojo, as well as Keegan, my other brother. But yeah,
Morning.
gentlemen, today we're talking about the stock market, investing. Specifically, we'll get into a lot of things, crypto, options, contracts. There are a lot of things where I think we obviously need to discuss, but I think I'll give you guys the opportunity first to maybe explain why you chose to dabble in this very risky, I guess you can call it risky if you don't know what you're doing, but obviously there's element of risk to any sort of investment opportunity or vehicle. But why did you guys start? So maybe let's start with Keegan. What made you look at the stock market, shares, crypto, all these things?
Yeah, I mean, first of all, I guess I am privileged in the point where I do have a bit of expendable income, and I definitely have a few friends in the industry that are in the stock market, and I don't think it's a bad way to go. I mean, obviously your aim there is just to beat inflation, so it is a very good way to put money aside and have it grow. I mean, we all know if you put money in the bank, it's not really going to do much for you. You may as well put it under your mattress at that point. It's not going to grow at all. So getting involved in stocks, I mean, it is it's controlled to a point, and I think crypto was just a different way of doing it. I mean, it's kind of a fuck you to big money and all the banks. Like we all know when there was the financial collapse, everybody just bailed out all the companies and money was printed, and it was like nothing happened. People still got paid their bonuses, all the CEOs and all of them. And it was kind of just like, I don't know, I looked at it almost like a game. I was like, oh, okay, so there's no way they can lose their money, but we can lose our money. And I don't think stocks are a bad way to go about it. But I just thought something new, something different, a digital currency. I think the world is going digital. There's no way we're going to stop that. And crypto hasn't yet found its true value. I think they're still kind of exploring to try and find out what the value of crypto really is. I think we haven't discovered half of its usages. I know we've spoken about it now before, where like crypto is at the stage where I guess the beginning of the internet was, where email was like the only thing we really used the internet for, and then all of a sudden it became podcasts, search engines, YouTube, blah, 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 you name it, internet banking, buying houses online, whatever it was. So I think crypto's got a long, long way to go to discover its full usage. And yeah, I think it's a market discovery still. They're still trying to find the value of it. But obviously a lot of people made a lot of money from getting in early, and then we all know where crypto is at the moment. It's currently in a bit of a crash, but that's not to say it's not going to come back. I'm pretty sure it will. And yeah, I just thought, well, get into something, have a little bit of your financial wealth, whatever you'd like to call it, in crypto. I mean, it can't hurt. If you have the money to spend, why wouldn't you try and get into something that could become, I guess, the next financial institution of the world? I think crypto will be used worldwide. It's not really, or there are definitely countries, as we know, that are trying to limit it and ban it and so on. But I think it's just a good way to put a little bit of your wealth or your whatever you have, some of your capital in there, and just have all your spread your basket. Don't put all your eggs in one basket. If it does kick off, which I'm pretty sure it will, it wouldn't be a bad thing to be in, and you just kind of have financial freedom at that point. I mean, you're in control of your money. It's like, I personally keep it all in a hard wallet. I don't leave any of it online. Not that I'm scared that someone's going to steal it or anything, but I just feel better having my hard drive with me and the money's on there. I'm not in it for, oh, it went up 10% today, I'm going to sell and make my 10%. I think I'm going to be in it for the long haul. It's kind of like an investment for me. It is, I wouldn't necessarily say a retirement fund, but that's the point. It's put money in there and wait 10, 15 years and see where it's at. I mean, I'm definitely in it for the long haul. And I mean, I think it's, like I said earlier, I think it's definitely going to be one of the future financial institutions that stick around. So I just thought it would be foolish not to get into it, even if it's, 5%, 1%, it doesn't really matter, but rather have something in it than nothing. I think it's a pretty cool way of people working with money. And the current way, the rich are always going to get richer. They don't really, it's not set up for your everyday Tom, Dick, and Harry to make a bunch of money. It's kind of like they want the rich, and they want you to slowly tick along. And yes, you'll definitely make money in stocks. Like I've got some money in stocks. It's also not a bad idea at all. The market will crash and it will come back. If you look at the history, like stocks have always gone up. That's just the way they work. Otherwise, there wouldn't be so many jobs and so many people on Wall Street, etc. So I think it's just an interesting way, a different way of doing things. And I mean, I'm sure we'll go into it, but the whole world with, virtual reality and all of that, that's going to become a lot more prominent, I think. And like metaverse coins and all of those kind of things, I think a lot of people are going to, unfortunately, probably stop living in the real world and kind of living online. So I think it's got such a potential to be, a way to make a lot of money, but also a way that people are actually going to realistically have money and spend money and save money. And it's going to be it's not just going to be your fiat currencies anymore. I think Bitcoin and Ethereum and whichever one's metaverse coins, they're all going to be soon in the near future. I think they're going to be quite regarded as actual proper currency. And get in now, get in early, at least understand the system. You might not have all your money in it or a bunch of money in it, but if you're in it, you understand it and you can see where it's going to go. So I don't know, I just thought it was a good idea. Get in, and if you're in it and you got skin in the game, you're going to learn how the systems work, and you'll pay attention to it. And so I just thought, it's not a bad idea, especially with the bit of money that I have lying around. It's not going to do me any good lying in the bank,
Okay. Kojo?
I think, from the onset, being at university, one of my majors was financial management. So we dealt a lot of ratios, financial ratios, and so forth. And I always looked at ways in which people make money whilst, as I would say in inverted commas, sleeping, right? So you're not really doing anything, but you're making extra income because you only have a limited time. And in a normal world, you are working 9 to 5 or even more, and you actually ideally don't have time to be doing anything else after work. So I thought of ways that people are making money without having to physically do much. So I read this book. It's actually a property book, What Rich Dad Poor Dad. A lot of people have criticized the book, but what I got from it was just the philosophy of what Robert Kiyosaki always states, that you need to find ways to make money whilst you're sleeping. So I started researching it more and looking into it more. And then when I was tutoring at the university, I was getting a bit of cash coming in every month, depending on how many classes I took. So I started putting this money into an investment account at first at one of the leading investment agencies in South Africa. But when I saw my returns, it was 10 to 13%. When I looked at most funds, this was one of the highest returns. So I thought, with all these financial planners, financial analysts, the best they can give me is 13%. So I realized that something is wrong, because I saw on the news that some stocks had picked up maybe 15% overnight, and some had made 30% in a week. And these guys are the guys that are reading financial statements every single day, so they're making a lot of money. So I knew that you have to learn how to make money yourself, putting the bank in a deposit 32-day notice account, whatever. People get 7%, and I'm so happy with 7%. So I started researching the stock market. I knew a lot of people not financially literate. Many people, your lecturers and so forth, they're actually not really clued up on investing, right? So they just analyze financial statements. So the more I looked into it, the more I found platforms which I could actually buy shares. So I would look at taking some money that I was comfortable with losing, and then I would put that in, and then I would see what would happen. But then I realized I had to learn how to make good decisions when investing. I had to learn how to read the markets as well. So I went into that, and then like now I'm nearly finished with my securities license to be able to trade and so forth. So when I went into it more and more, cryptocurrency became one of the emerging currencies. In 2017, I put a bit of money in. I kept it for quite a long time, and a lot of people are doubting it at first because, you know, when something comes out at first, people doubt it. They ask a lot of questions, and it's easy to call it a scam if you don't know how it operates. And one of the reasons why people are very skeptical about cryptocurrency is because it's not backed by anything. It's not backed by any commodity. It's not backed by any government that's issuing it. So people become skeptical about it. And of course, the governments hate you investing in crypto because they cannot control it. It's decentralized. So they cannot control it. So they really hate it so much. So long story short, in 2017 to 2018, I made a bit of cash, just a bit of cash on I had the LUNO account, and I had a wallet on there. And that started my journey to exploring how to actually invest. So my strategy was to buy 5 or 6 shares in good companies from different industries. It's also good to hedge against, you know, any losses. So I found different industries, thriving companies, and then I obviously played it safe with them and would monitor my stocks every day or two. And then I saw that what I was making was way more than what I was getting from, like, let's say, my investment account. Because I mean, there's one share I showed you, it was Anglo Gold. The Anglo Gold, I've kept it for a year and a bit, and I made about 169% return on it. My crypto token, I made 345% return on it. And I mean, that's brilliant. If you look at cryptos right now, Bitcoin has, since inception, 12,660%. Ethereum, 26,617%. So where are you going to hear of any investment in the world that will give you such a return? You'll never hear about it.
And even if you do hear about it, they're not going to sell it to you. Like, the rich guys are going to keep it kind of under, you know, your insurance brokers are going to be like, or your investment brokers are going to be like, hey man, it's the rich guys want to get rich. They're going to keep it to themselves to a point. Like, they want to keep the working man. So yeah, it's the financial freedom that it brings is unbelievable.
No, on my side, I think. Oh, sorry. You can continue, Coach.
No, I was just saying that. So that's what got me into investing. Just the need to be a bit more self-sufficient, and it's actually how long can you survive without your salary. So, yeah, that's what got me into it.
Okay. No, on my side, I think it took a lot longer for me than it should have. Reason being is that, as you guys said, that when you don't know something, it sounds like a scam. And I would feel that at first I was introduced to scams because at least the one thing I'm happy about is that somehow the numbers didn't make sense to me. I think when you get approached as a young engineer by your Liberty group and your Old Mutual group saying that, hey, you know what, you should be looking out for your future, which you understand, which makes sense. And they say, well, listen, you can put this money aside every single month, give it to us, and then we'll give you, 7.5% or 8% guaranteed. And you think about it, you're like, okay, that doesn't sound bad, because obviously maybe compared to banks and stuff like that, it doesn't sound like, a bad deal. It's guaranteed. I don't have to do anything. I just have to keep on working, which is what they say. You carry on working, obviously you do this and you'll be able to retire nicely. The part where it started raising flags, because I remember, it was one of these Old Mutual ladies. She said, come through. She sat down, I'll have a meal, have coffee. We're paying for it. They try wine and dine you, I guess. And the issue that I found with it was more of the fact that they were saying, yeah, but if you give us this money, you're doing this for 5 years. You can't touch it at all. And I was like, okay, I do get it. This is what you're giving me back in return, but damn, like, if anything had to happen, any sort of situation had to arise where I would need access to the money, if I wanted to withdraw it, you're penalizing me for my money. On top of that, I'm paying you a fee to handle this money. It's not like you're doing a lot of goodwill, and then you're still going to penalize me for my own money. And that sort of started to raise flags for me. But at the same time, what you said, Keegan, I think is actually quite important, where you say that, the rich man will want to keep the working class man the working class man. We always talk about how there's not enough financial education, financial literacy and stuff like that, but I'm pretty sure it's kept that way because, as you've said, they want to keep people a certain way. If you look at how to find jobs and what you need to do and skills and courses and all those things for people to keep on working, there's an abundance of it. But when it comes to financial education, financial literacy, all these other things, the information, I won't say is scarce, but is not packaged as easily as all these other things which would keep you working for someone. And that realization sort of only came a lot later, especially when I changed more towards IT. And being in IT, obviously dealing with a lot more business processes for me. And obviously Kojo studied a finance degree, so I think it was very much of a thing where the light bulb moment hit a lot earlier. And I think Keegan, obviously working on the boats, working with financially rich people, your light bulb moment went on very soon to be like, well, how is it that I'm going to be like these guys? When I was doing engineering, you're sort of on the factory floor. Business decisions are made upstairs, and you sort of are far removed from those type of things. Like you might see these things, but you think, oh, the reason this person is rich is because, you know, they're in a management position. Meanwhile, the boss is not in a management position. You know, he's obviously just an investor or something like that. So moving towards the IT world, I guess, two things which I would say brought my attention to it is one, my boss being quite savvy when it comes to investments. He spoke a lot more about these type of things. And as I was talking to him about a lot more, I was just like, oh, this type of information, you know, if you read it or, you know, if you actually go around the right channels and follow the right Twitter accounts, like you start to get a lot more and you follow this rabbit hole where, not rabbit hole, but you start to find out a lot more of this information and you find a lot more people which are actually into it. And it's not like, you know, it's an elite group of people. It's not like these people are or PhD in economics or finance or something like that, because you get a lot of people which have those type of degrees and qualifications who can't even, you know, get past the fact that they're going to work. They don't even have an investment account or something like that. But, you know, you go down this rabbit hole, and with my boss obviously highlighting some of these things, that's where I got to realize, oh, there is this type of world out there, and it's not as inaccessible as people think. More of the decision to actually be in that world is actually you making an effort to get in and pushing past those barriers, which are soft barriers, because at the end of the day, anyone can open these type of trade accounts and stuff like that. And I think the second thing that really helped was, as I said, in the IT working world, being able to obviously work, automate a process while the things are running. You can open up your computer screen and you can actually look at the share price. Whereas on a plant, you can't really do that. You know, you're on your phone, there are hazards, there are a lot of things going on at the time where, and you're walking around a lot more where, you know what, when you get back home at the end of the day, yes, you go to gym, you eat your food, and all you want to do is chill out at the end of the day. But being in this type of job where I'm not so burnt out at the end of the day, my mind is still active, and I've given access to, because of the nature of my job, given access to and have the ability to always have a computer screen on in the background just to see these type of things as, I guess, the markets change and have conversations with people. It really enabled me and opened my eyes to say that, there is the other there is this other side of life where if you're just so busy following your career path and doing your job and all those kind of things, like, you know, you might be aware of it if you're lucky to be aware of it, and on top of that, you, by the end of the day, when you really want to get into these type of things, you might be too tired to even participate.
Yeah, definitely. I think that's probably one of the big things, and that's why these investment firms do so well. It's like exactly that. You don't have time to pay attention to the market. You don't have time to continuously look at a screen and be like, okay, I need to do this, I need to do that. And it's like, they just, we'll charge you a fee, we'll invest your money, we'll give you an 8% return, which I think for a normal person, it's not horrible. I mean, like this is saying, it's not about timing the market, it's about time in the market. So the longer you have your money, the more it compounds, and at the end of the day, the more money you get when you retire. And I mean, it's not a bad option, but it's almost the only option that they give you unless you go out and spend a lot of time educating yourself. So yeah, it's a funny situation where they want you to have enough money to retire, but like, look what Kojo has done. I mean, if you put a bit of effort, a bit of time into it, you can find the right companies and actually get 100 8% plus return on your investment in a year, in 2 years. And, you know, like you said, people don't really understand, like a lot of the brokers, like they know, they read all these financial statements, but why are you still getting 8% when there's an option somewhere else to get 100 plus or something? But then also Kojo mentioned, you know, it's not backed by anything. But is any of our fiat currencies backed by anything other than our loyalty? Like, because we grew up knowing that these fiat currencies are essentially money, we just believe it. Like, they're all made up. They could be, you know, if they could all be cryptocurrency for all we care, because what happens when there was a financial collapse? What did they do? They just printed more money.
Yeah.
COVID happened. What did they do in America? They printed billions of dollars, and it's like they can just make more. And like, who answers that? I mean, essentially, we do. We're the ones that pay, because now there's going to be inflation. You know, living costs go up. So yes, they can just print money and get themselves out of a hole, but it's like, well, the working man is the one that's going to be punished for it, because you still got your billions of dollars, and it doesn't affect you as much as it does us. Like, our bottom line is a lot smaller than yours. So, yeah, I mean, I think that's the nice thing about crypto is it is not understood properly, and it is going to be fought against by the guys that are so into your fiat currencies. Because I think a part of them knows, like, well, this is basically what we're doing, but it's paper money. It's, you know, regulated, and the banks back it, everybody backs it, and if everybody switches over to cryptocurrency, they're not in charge anymore. Someone else is calling the shots. Like, and I think that's what scares them. I don't think when it gets down to the numbers and the facts, they can't deny that it's a good system and that it's a good financial way of freedom or a good financial institution to use. They just don't want to use it, in my opinion, because they're not in charge anymore.
Yeah. You know, so fiat money, usually, like of course, the United States dollar, the euro, and so forth, they normally they're issued by the government. So their stability is based on the government and how stable it is. Like, I think it was in 1970 something that President Nixon in America took the US dollar off of the gold standard.
Yeah, no one's backed by gold anymore.
Yeah, no one's backed by gold. But countries like, well, areas like Saudi Arabia, Russia, Venezuela, their prices tend to follow the oil prices. I mean, the currencies tend to follow the oil prices. But you also get pegged currencies. I mean, Botswana is a pegged currency. I mean, they are pegged to in a fixed exchange rate with the United States. That's why their currency is always stronger than the rand. So they kind of made a decision a long time ago to peg their currency with the monetary policy of the United States of America in order to keep themselves afloat, since international contracts are all done in United States dollars. So with cryptocurrency, one thing that the governments really despise is the fact that there are only 21 million, for example, bitcoins, only 21 million of them. So you cannot just go make more bitcoins when there's a financial crisis, because, like in South Africa right now, South Africa is in really big trouble because, like you said, they printed more money. And what happens when there's more money in circulation? When there's more money in circulation, the value of the money decreases. Yeah. So the value of the rand will decrease because there's more in circulation. That's why we're hitting inflation and soon hyperinflation, because they print money without realizing okay, they do realize it, but without any conscious decision of how we're going to solve this problem. Because the more you print money, like Zimbabwe printed so much money that, I mean, people are literally making jokes of buying bread with a wheelbarrow of money and so forth, because there was just so much money in circulation. Because you need to control demand and supply of money. When there's less money in an economy in circulation, the demand for it is higher. I mean, the value of the money increases. So that's one thing that they hate about Bitcoin, that Bitcoin's market is supply and demand. I mean, when there's increase in demand, the price goes up, and there's a slow supply of it. There's only 21 million of it, and people don't want to exactly sell it all the time. So the value of it increases. People can make payments instantly with it. People are running away. The government wants to tax crypto now, especially in South Africa. They want to start taxing crypto.
Yeah, no, I've seen that.
And I mean, I don't see the need for that, because I feel like people should be able. I mean, I don't mind paying tax if I know my money is being used for, the benefit of the country, but I mean, we all know the situation in a lot of these countries. South Africa is one of the highest income tax brackets in the world, which is quite scary because people don't have disposable income to be able to invest. They don't have it. So you tell someone that, look, you can invest on easy equities or on crypto.com or whatever, or Coinbase. They always think that they need a lot of money, and they know that they won't have it. Because, I mean, the way the system is set up in South Africa is that they tax you all over. I mean, when you get your salary, you get taxed. When you buy products, you're paying VAT on that. So everything you're doing, you're just getting taxed so much that you don't have disposable income. So, I mean, I'm reading this book called PowerNomics by Dr. Anderson. And he talks about the power of community, well, let's say people coming together to start businesses. Because it's based on the black community in history and how, for example, there's not so much disposable income available. So what they need to do is work together in order to start businesses or in order to invest together, because individually you won't be able to do that. There's a reason why people in South Africa don't know much about investing. It's because they also, number one, people are very lazy to learn about investing. You can learn about it if you want to. All the information is on the net. You want to do it, you can do it. But you'd rather pay someone to do it for you, right? And I mean, we've been sold this lie of stability. So even when this person is talking to you, they're just telling you stability. They'll tell you if you do it yourself, you lose all your money. I've been approached by financial advisors before, claiming to give me this investment account and so forth. But when you ask them real questions about the return, your rate of return, and market questions about indicators and so forth, they don't know what they're talking about. They're just selling you. They're salesmen. They're just selling you products.
Oh, exactly. Yeah, they just want their commission.
They don't know anything. And I mean, if they're so good, how come they're not rich?
Yeah. No, that is very true, man. Like, at the end of the day, it's like you look at a movie or a book. I mean, I've read the book and watched the movie. That whole Wolf of Wall Street thing, like, they don't care about anything. They just want their commission. Like, whether you get into a stock that makes you a lot of money or that, it's not. Maybe it is because it probably is because they're lazy or not as educated as they should be. But they don't make any more money really if you make money. It's like they get their commission on selling you the stock, and that's that. So
where they plummet or whatever, they get the commission before they even put in the money into the market.
Yeah, so it's like, it is quite and I think that's one thing where America is such a nice country, is where you go to different states and every state has their own law. It's essentially its own country. They're governed by state law or federal law, and then everyone has state law. Like in Florida, I believe there's no income tax. So you don't get paid, or you don't pay any income tax, but then there's sales tax. So their sales tax might be higher than a place like Texas, where you have income tax, but your sales tax is like 2%, because they already taxed you on your income. So they're not really, essentially they're not going to double tax you like South Africa. Like you said, you pay a high income tax, and then you're paying 15% VAT. So it's you're kind of screwing the population over, and then people, they don't have the money, the disposable income. But then again, it also comes down to, like Kojo said, if you get educated, like you don't need tons of money. Like if you educate yourself in the market, like you can put money aside and actually find the right investments, whether it's crypto or the stock market, and just do it yourself. But then again, that takes time and that takes effort, and then a little bit of money, obviously. But the world we're in today is, it doesn't lend itself to you educating yourself. It's almost like, oh, well, you can just put the money in the account and someone will do it for you. You don't have to be educated in it. It's like, you'll get your return, but then you're definitely not getting the highest potential return. And I think crypto, because it is, well, at least Bitcoin is, I think Ethereum and that, they probably can make more, but it's capped. Like Kojo said, it's once the 21 million Bitcoins have been mined, that's it, game over. And then it's literally demand. And who knows what the end of crypto is. I mean, or Bitcoin at least. What's the market value going to be when everything's mined and there's no more of it, and people start using it more because you can get paid instantly. You work 4 hours and you put your time in. Someone can just pay you in crypto and be like, cool, done. You won't get taxed on it, at least not yet. And it does just give you the financial freedom. I mean, if as a freelancer, getting paid in crypto would be one of the best things that could ever happen.
I think that's why there's a big boom over the whole NFT market, isn't it? Because if I'm not mistaken, even in South Africa, because I was doing my tax return obviously for last year, and it has a specific section to say, did you make any sort of income from cryptocurrency? So now, is it only if you actually have to cash out your, and probably Coach will be able to let us know, when you get taxed on crypto, is it only when you cash out for it to be, let's say, in rands that they can obviously, not let's say detect, but is that when they demand, when you actualize your crypto into one of the fiat currencies?
Yeah, so my understanding is that at first they wanted to this is the scary part, USA and South Africa, they wanted to tax people on unrealized capital gains. So that is quite crazy, because I mean, imagine now your house is 1 million, the house is 1 million, and then something happens, maybe you revamp it or whatever happens, the market is good, and your house is worth 2 million now. That 1 million difference, your gain, even though you haven't sold your house, they wanted to tax you on that gain that you've made without even selling the house. So you must fork out 224,000 rand on that 1 million rand gain, and you haven't even sold your house. Imagine now every year doing that.
It's not even a capital gain yet. You haven't even made anything.
Not even a capital gain. It's unrealized. So with crypto, they're going to tax you in a similar nature, because normally with shares, for example, like if you use a platform like Easy Equities or so forth, they will tax you on, let's say, your capital gains. They'll give you dividends tax or withholding tax, like different kinds of taxes depending on how you withdrew it and so forth. So with cryptos, I think it's also capital gains tax that they'll charge you, and I think you'll pay tax on it when you actually convert it into fiat currency.
Yes.
Because you'd have to declare where you got that money from. Eventually, you'd have to declare it. So I know a lot of people are looking at different ways to beat the system. You know, they look at ways of putting the company account, then donating it to themselves, and all these weird type of things, because you have like donations tax exemptions of 100,000 per year. So I think people are looking at finding ways to do that, because I really don't see the need to tax people on crypto. I don't see the need to do that, because I mean, you're already getting so much tax from export, import, whatever it is, all these import export taxes. You're getting the income tax, and I saw a very scary stat today that only apparently less than 5 million, so 3 to 5 million South Africans actually pay most of the tax in South Africa.
Oh yeah, definitely. I'm not
because
surprised.
people are just not making enough money. I mean, the Parliament building burned down last week, and now it wasn't insured. By the way, it wasn't insured. I saw the news today. It wasn't insured, so now the cost to fix it is 1 billion rand of taxpayers' money. So I mean, the whole system is messed up. It doesn't allow people to invest and people to save, because, you know, taxes, investments, you've got to know these things. You have no choice nowadays. You have to know them. If you thought your job was secure, this was a big wake-up call, because people are getting retrenched from banks, from many financial institutions, from universities. So I mean, it just taught people that you need to have something lying around that is growing whilst you're working. With NFTs, I'm also quite interested in NFTs. I haven't bought an NFT yet, but I have been looking at NFTs. I think it's also another avenue, another alternative investment that's going to become very popular. Is already popular, but it will become even more popular, because I mean, you even get NFTs now in music.
Yeah, and you see,
art,
I think that's the thing. Those are going to become extremely popular and extremely valuable once your metaverse and all of those things become popular, because people are already buying property like in the metaverse. So like there's something called Sandbox, which is like basically, think of it as like, I don't understand it extremely well, but think of it as a suburb. So Sandbox is a suburb, and you can buy property in that suburb. So you could be Snoop Dogg's neighbor, for instance. You could buy the plot next to Snoop Dogg, and the NFTs, like in art and music, will be bought and brought into that metaverse. So you could have your house on Sandbox that you bought and you paid however much for it, and then in there you'd obviously it's all virtual reality, and you could have the painting that you paid I don't know, $10 or $5,000, whatever you paid for it, that painting will be in that metaverse, and it will be hanging in your house. Or you bought the music, and that music will be able to be played while you're in the metaverse. The clothes that you wear there, the jewelry you wear there, like everything. And it's almost like, I guess a very basic way of thinking of it is like playing a game on your phone or whatever, where you have in-game currency. You know, you can buy gems or whatever, some coin to use in the game so that you can buy different clothes, or like, you know, something that you exchange real money for the coin money or the game money, and then you use the money in the game to buy things, whether it's paint your house, get a car, and like that's going to be a lot of what the metaverse brings. So it's going to bring a huge, I guess, market for NFTs to be used. And like you'll see artists are going to be some of the wealthiest people in the near future, I think, because they're going to just continually sell their art, continually sell their music. It's all going to be NFTs. It's like, it's difficult to understand, like coming in. I don't understand it fully either, but I've read about it quite a lot, and I've listened to a couple of podcasts about it, and it's definitely a way that things are going to become, like, people are going to want to live in the metaverse a lot more than in real life, and there seems to be a lot of money made there. And yeah, a couple of points just off of that. I mean, going back to the whole South Africa thing, is like you were saying, you know, you don't mind paying tax where you know it's being used for like extremely good public healthcare or free education or very good public transport. That's money that has been taken from the citizens of the country via tax and been put back into the country to make it better. The roads are fixed, the hospitals have good doctors, and they're always open and they can work. You know, then yes, nobody has a problem paying tax. Like America's decent at it. It's not the best public transport, but I've been to Europe where you just jump on a train and you can go anywhere. You go to a bus stop, you can go on a bus, and you pay your bus fee and you go. And it's like, those things people don't mind paying for. Like in Canada, free healthcare. But the problem with, I guess, South Africa is the taxing is so high, but then we're one of the most corrupt countries in the world too.
Yes.
Like, where else in the world would you have heard that your parliament would have not, the building itself would not be insured?
Yeah.
Like, that's absolutely ridiculous. The money that should have been used to pay for the insurance was probably put in someone's pocket. Now the building burnt down. Now you're going to want more money from the people paying tax so you can rebuild it. Whereas you've stolen the money that would have actually been the security on the property. Like, it's crazy. Like, the whole 3% of South Africans paying most of the tax. I mean, all you need is, I think, what's his name's already kind of pulled out. What's the big South African?
Johan Rupert.
Yeah, Rupert. Yeah, he's pulled out almost completely. Like, he was paying a large chunk of South African taxes, and I think you need 2 or 3 more of him, someone of that caliber, to pull out, and the country will be in a very, very sore place. Not that it isn't already. And then, Coach, I was going to ask you, just for anyone listening, especially South Africans, like, what would the best platform be to invest, like, in the stock market, whether it's South African stocks or international stocks? Do you have I don't know, do you have any platform that you'd recommend?
I think the basic one that people are using right now, I think it's, if you want crypto, it's VALR. People call it VALR. You can invest in a lot of cryptos. That's strictly crypto. So all your cryptos are there, from Stellar to Dogecoin to Bitcoin, Litecoin, everything, Ethereum. It's all on there. And you can also buy tokens as well. They're like almost like ETFs for crypto. And in terms of shares, like buying actual shares and keeping them for like the long term, I'd say easy equities, because you have access to US stocks as well.
And that's easy to do as a South African citizen.
Very easy, very easy. You just need your tax number, your ID number, and then you get verified within a day or 2, and then you can start. It's very good because, I mean, you literally have access to US markets as well. And then if you want to actively trade, I think I would look at plus 500 if you're from South Africa, because you can just use your credit card or your check card and be able to fund the account and then withdraw money when you need to. So I'd recommend people to actually buy shares and hold on to them, because actively trading is a very, very difficult thing to do, because you have to watch the markets for quite a while daily. And a lot of these forex guys have made a lot of money tricking people into, because these forex guys actually make money from their seminars more than actually trading, I think. Because they'll teach you they'll give you a 1 week course on how to trade. But if you've studied economics or financial management, you know that all these indicators, market indicators and so forth, they can't be learned in 1 week. It's impossible. No, there's so much more to it. And also, if you want to actively trade, you need a lot of money, because you need to have a certain amount of money before the margin to keep your positions open. If the market drops below that point, even if it picks up eventually, it'll blow you out the account. You lose 10 grand in a second. If your pockets aren't deep. So these big companies, investment companies, they have millions in a trade, and they can literally keep it there in pocket there for a whole year and wait until the stock eventually increases. Or if they're shorting the market, they can wait until it eventually gets to the point where they can pull out. But you, who's limited in the finances, let's say you have 10,000 rand in there, if it goes beyond a certain point, you can literally just close your account instantly, because it's gone beyond that. Even if tomorrow it picks up again, you still close your account quite quickly. So I'd advise people to play it safe by actually buying the shares and holding them for speculation purposes for a long period of time. So picking some good companies that they think are, and when you're picking companies, you shouldn't just pick a company because it's popular, like you've heard of Apple or
Tesla,
Facebook companies, But you should actually look at stuff like financial ratios, PE ratio, the price earnings ratio. For example, the liquidity ratios, how liquid is this company, debt ratios, how much debt do these guys have, how are they financing their debt. These are all things that are not so difficult to learn, but they make a difference, because like on Easy Equities, they give you all the financial information of the company. So you can actually look and see, okay, so this company, some companies, you find the stock price just increasing for some odd reason. And you have to be really watching these. You have to be really watching these stocks quite well, because usually if you read about it the next day in the paper, it's too late. So you need to be on them. You need to be on them, and the reason why, if you remember do you remember the GameStop saga? What happened at GameStop? So these Wall Street oaks were GameStop was a company that was literally
it's falling apart.
people are holding short positions on it for a long time. People are making money. So now, if you want to compare it to companies in Africa, it'd be like what, these type of companies. So these Wall Street guys literally just had, because the power of Wall Street is that if you work in a JP Morgan, I'm working at Goldman Sachs, I can just give you a call saying, Keegan, listen, there's a stock here, and I know you got a big account there. Let's just make a bit of cash.
Let's flood
so
the
what
account.
happens is that, so these guys started buying stocks in GameStop, and it caused the price to rise.
Everyone thought, it's on the rise.
And all these guys in short position, were having headaches, because they did what you call a short squeeze. It's illegal, actually.
Just to correct
because
that.
the rapid increase in the price.
Just to correct that, I think it was the Wall Street guys which were actually shorting the stocks, and Wall Street Bet is actually just a group of people on Reddit who realized that the Wall Street guys were about to short the stock, and they put in all of this money, obviously, in that short position. And then the Wall Street or the Reddit group, the Reddit guys were just like, oh, let's screw over Goldman Sachs and all these other companies, and then they bought in to push that price, and then obviously lost all their margin as well as their short position.
Yeah, it happens because if you've been holding a position for a long time, and all of a sudden the price starts increasing, you start wondering what's happening now. And then all of a sudden it's like they're forcing out of that position. And then what happens is eventually when the price increases so much, they force you out of your position, then you end up probably, because what happens is when everyone sees the price is going up, everyone like you and I, who are normal people, not on Wall Street, we start buying the stock now because we see, wow, there's a rapid increase, right? And then what happens is they short it at the end. They short it to make sure that all the guys who bought in get flushed out again.
Well, Donna, we spoke about it. The one guy was like, oh, guys, I put all my money in. They're like, oh, thank you. Sacrifices were needed.
I think the quote was that your sacrifices were appreciated by the market.
But it is a funny thing, man. To go back, that crypto site you said was VALR, right?
Yeah.
It's an app.
So that's all.
VALR.
That's going to be in South African rands, then I assume.
Yeah. Yeah.
Okay.
You just need a South African cell phone number to actually register on it. So if you can't from that side,
Yeah, no,
or-
I use it doesn't have the versatility of having a lot of the smaller cryptos on it, but it's I believe it's called BlockFi. So
Okay.
it has quite a few of your main cryptocurrencies on it. But I mean, like I said, I don't use just one, because after I do purchase any crypto, I take it off, I put it on my wallet. I got a hard wallet. I think it's called SecU or SecUX or something. I just basically keep it on an actual hard drive, and so it doesn't really matter where I buy it from. Every time I do it, I just transfer it onto that.
Okay.
It's just for my own safety, I guess. I just carry it around, and if I ever want to sell or buy, I just hook it up to my computer. It takes a bit of time, but it's like I said, I'm not really in it for the daily trades. It's more of a rainy day fund that if ever one day I needed it, or Bitcoin went crazy and I decided to opt out, then I'd kind of just transfer it back onto the web and sell it. But yeah, I mean, it's definitely not a bad idea. If you want to try and make money quick, there are a few coins that are selling at like cent, or in dollar wise, cents to the dollar, and it's kind of put a couple of $100 in each of them and just see what happens. But I guess your mainstay crypto at the moment is really your Ethereum and your Bitcoin. But yeah, I think Ethereum's unlocked a lot of different. It's made Bitcoin a lot more versatile, or crypto a lot more versatile. Like Ethereum is, in my opinion, is going to be one of the big ones. I mean, obviously they can make more of them, which is a bit of a concern if the wrong people get in charge or in control of it. But yeah, I think it's definitely not a bad way to go about it. But then again, the market's not either. Like if you want to get into stocks, I think, either if you have like a Vanguard 500 or whatever, where you just, put a bunch of money in and set it and forget it. Like that's someone that's not going to be looking at the exchange or at the stocks every single day. It's kind of a 10, 20, 30 year plan where you put 500 Rand in, or a couple of $100 in a month, and you just ride the wave. Because I mean, yeah, ever since the market's been around, it's always gone up. So if you're in it for the long haul, you will make money, but whether you beat inflation or not, that's the question. And I mean, ultimately that's your goal, really. Is your money worth more than when you put it in? When it comes time to retire, all the money you've put in, has it gone up enough to just beat inflation?
But that's where the scary part of a beautiful thing like a cryptocurrency now would scare me, to say, if I put my position, let's say, long on the stock market, I buy S&P 500 and waiting for 20 years, but in the next 10 years, we move to a decentralized currency, and I really believe at the end of the day, we the people are going to be the ones which should decide and will decide that we need to move towards it. Because now that you've explained it, I see it was sort of just one of those light bulb moments of saying that we are basing fiat currencies and our own currencies based on our government. So our competency, the government's competency, determines our exchange rate at the end of the day. And in a place like South Africa, we've got clowns, obviously in charge. So we could be better, but because we've got incompetent people in leadership, it means that, we are not benefiting from a stronger currency and a stronger rand. Whereas then, or if everything is going to move to a centralized system or centralized currency, why not? Why shouldn't I put my money in that, where at least I'm not going to lose value because I've got idiots at the top? On top of that, until I actually, as you said, realize my purchase of somehow, for some reason, maybe converting it back into rands or a situation. But if I don't have to do that, if I can exchange or buy in crypto, in Ethereum or in Bitcoin, then yeah, maybe I don't have to pay tax again, because I'm going to get taxed, a second time. The first time, obviously, from my salary, they had nothing to do with my increase of obviously the risk that I am taking, or the increase that I am obviously going to get from putting it a decentralized platform. It's not going to be based on the incompetencies of the government, and now it's obviously gone in value because of everyone else in the world, and now they want their fair share. So no, I'm not going to obviously cash it out into rand so that you can get a piece of the pie for doing absolutely nothing and making terrible decisions, because we keep rewarding them every single time we do these type of things of, I guess, spending money and obviously cashing out on these investments and stuff. We keep rewarding them for their bad decisions, and I really feel maybe that is why they don't feel the consequences of a lot of those things. As Kojo said, it's going to be 1 billion rand for their stupid decision, and who has to pay for it? We have to, at the end of the day, because of their incompetence. So I actually do like, I think I've been sort of listening about obviously how the blockchain works, and now especially the thing of it being decentralized, and I think that's really your major component, because as Kojo also said, like, you know, a lot of places used to do it based on gold, and if it was based on gold, you know, Africa should be one of the richest nations in the world. Was it one of those strategical moves to say, hey, let's move it away from gold, otherwise we're going to lose our position of power? Maybe it was one of those things, because there shouldn't be a reason why we are in such a bad state. Our currency should be so weak. The fact that even Botswana is basically pinning it or pegging it to the US dollar, why? There's so much gold within, you know, Africa in terms of resources and stuff like that. So was it a political, really smart move back then to be like, let's not do it based on gold because we're going to come up short at the end of the day, compared to other places? But if it is decentralized, and you made a very good point, Keegan, to say that basically we're doing based on trust, so we might as well be buying Ethereum at the end of the day, because we're doing that based on trust, except for this is not really trust, it's based on a supply and demand you know, ratio, or the principle of supply and demand at the end of the day, which will determine the value. Whereas, yeah, we've seen it now. People just print, the government's just printing money because they're incompetent to manage the situation. And that's basically making life worse for all of us. And
Yeah,
I don't subscribe to that.
I don't think it's not even only your third world countries or your African countries. Like, there's incompetence here, man. Like, being in America for the last 5 years or so, like, when Trump came into office, like, they have a Federal Reserve of Brent crude oil, and for military purposes. So if America went into war, they have a reserve of oil used for all of the military purposes. And when he came in, fuel, I can't remember exactly, but it was like $2.50 maybe for a gallon, just at the pump station. He came in, he got a really good deal and got really, really cheap, or at least it was, yeah, he got oil and filled the reserve from 15 or 10%. He filled all the Federal Reserve up, and then fuel prices dropped by like $1 maybe. I mean, I remember looking here in Florida at one point, it was like from $2.50 to like $1.20 for a gallon. Then obviously this whole COVID thing hit, and to try and stimulate the economy, they printed a bunch of money. Like, they printed a shitload of money here. Like, I work with some guys that had a working visa in America, South African citizens, that got paid out, like, because they did the whole, what was it, they got given stimulus checks. This guy was an American citizen that had an American tax number because he used to work on land here, now he works on boats. He got paid like close to $10,000 by the government, by the American government, just because he had a tax number. And he used to pay tax. I think he paid tax for 2 years because he worked on land. So he even got a stimulus check from it. He must have made like $10,000-$15,000. So then they printed a bunch of money. In my opinion, they've used their whole reserve to try and keep things stable in a way. They basically used all the oil that they had in reserve. Now fuel prices in Florida, which is normally some of the lowest in the country, it's like $3.60 a gallon. So it's gone from $2.50 to $1.20 to now $3.60. And America is currently having the highest inflation rate it's had since, I think, before Nixon. So it's like 40, 50 years. So there's incompetence. Yeah, everywhere has their problems, and like,
Keep it Joe Biden.
oh well, yeah, let's go Brandon, as they say here. But yeah, it's you know, these guys, they I don't know whether they just don't care or they don't know or whatever, but the whole financial situation of, oh, let's just print more money and we'll, you know, to almost, it's like it's a very short fix, but at the end of the day, like I've already said, we're the ones that pay for it.
Yes.
And I think with the whole cryptocurrency thing, it's definitely got a chance of fixing that, but they're not in control, so they're going to fight tooth and nail until the end. But I do think that, I mean, there's no way crypto, like you still read online and people say, oh, crypto is going to fall away, it's going to disappear.
It's the mainstream media.
Been around for a long time.
Yeah, no, I think it's going to be around. No, because they've got their agendas, man. They've all got their fingers in the pie, and in the current institution or financial institutions, all the people that are telling you that are the people that are either making a lot of money from it or in control of it in some way. And I mean, you know what humans are like. We don't want to lose power. We resist change. We don't want to. If we're in charge, we want to stay in charge, and that's something to do like with the whole taxing crypto. Like they want their fingers in that pie now too.
Yeah.
You know, like they wouldn't want to, if they really didn't care about it or didn't think it would become serious, like why would they want to tax you? Like they want to be involved in it too, and they want to have some say in something. I think they're going to be fighting.
Want to control it.
Well, exactly, they do. Essentially, they want to try and control it. And I find it very difficult on how they can justify taxing you on crypto, because they don't back it, first of all. They're against it, but now they want to benefit from the financial gains. Like, I mean, hopefully, I haven't read too much into the tax laws, because like I said, I'm not selling any crypto anytime soon, so it doesn't really bother me unless it's unexpected capital gains, which is absolutely fucking ridiculous.
Just get it donated to yourself.
Well, yeah, that's the other option. Yeah, just donate it.
But another thing I thought about, think about it this way. I mean, $1 is what, like 16 Rand odd. Let's just say 16 Rand for argument's sake. So, I mean, like, okay, the country Kuwait, one Kuwait dinar is 55 Rand. Okay?
Sure.
So it's the strongest currency in the world. So if you look at it this way, imagine now I want to buy a TV in America and I'm in South Africa. I want to buy anything in America, and I see that it's $300, $400. It's a lot of money. I mean, it's like what? You're looking at a good $6,000, whatever, right? What if I hear it's 0.001 Bitcoin? Whichever side of the spectrum I'm on, it's just a piece of the Bitcoin, right? It's not actually, the price is not influenced by foreign exchange. So I mean, we kind of on the same level playing field. If I'm earning one Bitcoin a month in America, and I'm earning 1 Bitcoin a month in South Africa, it kind of puts things at the same level. If the flow of goods also in crypto, I'm buying fruits and vegetables in crypto, I'm buying everything in crypto.
Yeah.
There's no foreign exchange differences.
Yeah,
I mean, now
it's a one world currency.
The same field. Yeah, one apple is 0.001 Bitcoin, and in America it's the same.
Yeah.
So the whole world goes back to the same level. We're all on the same playing field.
Oh man, and I think that's the biggest problem. In their eyes, that's the biggest problem.
Yeah.
Because they don't have financial power over anyone at that point. And it obviously will come into, what are your costs of living, and that'll be determined on how much the average salary would be in Bitcoin or in cryptocurrency. But still, they don't have the financial control that they would if it comes into Forex, when you've got exchange rates. And I think that's one of the biggest things that they're scared of.
Just look at the euro, and let's look at the euro. Okay, if you look at Europe is small compared, let's say, to Africa, right?
Yeah.
And if you have to ask yourself, why is the euro so strong?
Sure.
Why?
Perception, marketing.
Why is it so strong? I mean, they get a lot of their stuff from Africa, minerals, everything.
90% of the minerals come from Africa.
Without that, there would be nothing. There would be nothing, right? And their currency is backed by a lot of their currency, like in Spain back in the days, used to be backed by gold. But I mean, this backing by gold in inverted commas, it's literally like real gold there.
Yeah,
right?
You never really physical gold. Yeah,
physical gold. I mean, you never really see it. It's just backed by gold. So I mean, the whole system of money, for example, it's crazy that, I mean, let's say you go to the bank and there's a mistake in your account, They just literally press a button and the money's added back in your account. They never moved money physically, right? And they create debt out of thin air. I was actually watching a documentary about credit default swaps and how these guys are making money on Wall Street. So let's say you've taken out a loan, right? I actually trade on that, on your credit, that you're not going to pay the loan back. And people made money through that. So there's a whole market created by these junior investment bankers in the 90s on some leadership summit where they came up with credit default swaps that literally collapsed the American system. Because, I mean, I believe some of these crises are even, they manufactured.
Oh, for sure.
I mean, for example, with all these lockdowns and everything, every person knows that South Africa cannot afford a lockdown. Our economy is already in shambles, right? And people want to work. But, I mean, they still continue to do it. And, I mean, if you look at South Africa, how it is now, the rand, people are wondering, how is the rand still, like it's $1 is 16 rand, but why is it not 20 rand by now?
Sure.
I mean, so much happened in South Africa because these guys continue to print money, and they're making the same mistakes Zimbabwe did. When you print money to buy you a few years, and no one will notice anything, but eventually, it's a big problem because you have foreign debt. I mean, these guys borrowed like hundreds of millions to buy vaccines on the IMF. It's not cheap, right? And now all these debtors are recalling all these creditors are recalling their debts now. And I mean, now all these African countries must pay all this money back to America, China, whatever. And I mean, now the problem is happening now where there's no cash flow. So I mean, now it's a situation that has triggered so much policing around currencies now, because I mean, now you've been exploiting the taxpayers' money for so long that these guys can go to crypto now. And because of that, you see that we won't be getting as much money as we usually get to be able to squander the funds of the country. So now when people are going to crypto, you want to control it so much because you're afraid that people will be able to become financially free, number one. Number two, they'll be able to have more disposable income and have an alternative to how do banks make money? Banks make money by lending you money, right? And by investing in your behalf and so forth. But now if people are not keeping money in the bank, keeping money in crypto wallets, that's also another problem for the banks.
Because
they
don't have
now,
access to the free
there's
money.
no money to lend. There's no money to lend anyone. Because if I can keep my money in crypto and get some returns on it more than what I'll be getting at a bank, and I can withdraw it anytime I want to, why am I keeping the bank?
Yeah, because at no point in time is the bank, because they'll always talk about, it's so much riskier to buy crypto and stuff like that. Since when does the bank actually care about your risk at the end of the day, unless it doesn't benefit them? So for them to point out, it's much riskier, or even the government on that plan to say that, we don't want to allow crypto because it's not safe. Since when do they care about our safety? And then that actually bothers me. That always raises flags with me when they actually say things like, we're worried about this, or we're putting this in place for the safety of our people, because they really don't care about people's safety at the end of the day. So whenever they say that, you have to realize, well, how is it that they're going to benefit if we don't choose this path? They're definitely benefiting somewhere, because they've never cared. They never do care. They never will care about our safety at the end of the day. So for them, when banks say that it's an unsafe situation, I'm not saying that it's not an unsafe thing, because I'm pretty sure you've seen a lot of things where even in South Africa, I think two brothers, they started that cryptocurrency and they left with a few $100 million, or I don't know if it was close to $1 billion. I don't know if they eventually caught them. They might have, but they'll obviously always flag those, let's say, isolated cases. They'll always flag those things to try and make you sort of question it.
Skeptical.
But that's why I'm like, since when do you actually care? Mainstream media and government.
Governments don't care. I mean, it's happened a few times in history. I know it happened in England, and it almost happened in South Africa, where the governments wanted access to pension funds so that they could invest it. They'll go and use the pension fund that the government's created for people when they retire. You put your money in, and then when you retire, you paid out your pension fund. South Africa wanted to do it, and it's happened in England. I'm not too sure how many other countries have done it, but on your point, they don't care about your money because they're happy to go and take your pension fund and go and play with it on the stock market. And it's like, and if they lose everything, sorry guys, pension fund's gone. Like that happened in England with, Maxwell, Ghislaine Maxwell, the lady that's involved with that whole Epstein thing. Yeah, her dad did it in England, where he got hold of I think it was, I don't know if it was the miners' pension funds or someone's pension fund, and he basically did that and lost all of their money, lost it or stole it, I don't know, but yeah, like, so yeah, they definitely don't care about your money, because if they're willing to play on the stock market with our pension fund,
Yeah.
why would they, like, they don't. So the biggest thing is they don't want financial freedom, because with that comes, oh, I can go and live anywhere in the world now. I don't have to live here. So you're losing a tax-paying citizen, and you're losing access to that person's wealth. I mean, yeah, they definitely don't give a shit, man.
But
As long as they can benefit from it.
But I think that also begs the question to say we definitely need to decentralize a system, because where do you actually find competent leadership? I can tell you now, speaking to Imran in the Netherlands, they don't have competent leadership. You telling me there in America, obviously, there's no competent leadership. You know, here in South Africa, we're a joke. Forget about that. We've got zero competent. We're probably the worst of the worst, some of the worst of the worst. But everywhere that you do go, that's what I'm saying. Netherlands, if you go to France, if you see exactly, obviously,
England,
how Australia, even Australia, the way it's crumbling and falling now, obviously for a different reason. But still, we do not have competent leadership. And I don't know when it is that we as a people, society, or I don't know if it's this age group or this generation, that we've decided to put idiots, or how we've been able to actually put idiots in power. But I do not see any politician right now that I can say, you know what, I respect this person, or I actually think that they're highly competent in what they're doing, they're actually doing a good job. All it is, it seems like they're just interested in finances. Everything is just finance related at the end of the day. And you just sort of say, well, where did we lose touch with reality? Where did they lose touch with reality to say that, listen here, you're a civil servant, not a influencer, not a lobbyist, not anything else that has to do with, you're not a ruler of the people. You're supposed to serve the people. Now you're there saying that, oh, we will do this, we need to do this, we need to do this. And it's like, how are you actually serving anyone? That's what I'm saying, that no one would actually bat an eyelid if they were actually saying that we are taking tax money and we actually do this, and we can see a benefit, we can see better roads, we can see education, we can see that the community of the country is being uplifted with the tax money. They can't do that, but at the same time they're asking for more money. So you're just like, no, we can't give it to an incompetent person. Imagine now everyone giving their 3-year-old kids the whole finance for the house and saying, okay, you're in charge of the budget, you're going to make sure that we're going to do this every day. What's going to happen? The kid's going to buy candy every single day. And that's exactly what we have. We've got a president that just buys candy every single time at the end of the day, because he's incompetent and stupid.
But you see, I think that's the tip of the iceberg, because it's not only about the healthcare, are the roads fixed, or is there public education. Like, those are like big pointers that people can easily say, hey, this tax money is not being used. Like, it goes a lot deeper than that. It's like, it's a fine line whether you want, like, should you be in a communist country where things are done, and yes, you might not have the greatest life, you might not own anything, but you know, you're a lot better off than quite a few other countries in certain aspects, whether it's you have a roof over your head, you have a job, you get fed, you have public transport, everything's basically run by the government, which has a lot of obviously downfalls. And then the other side of it is, and it's a fine line whether you want one or the other, or which is better. There's an argument for sure. Obviously, communist countries, it's not great because everybody's marginalized and controlled. But then the other aspect is, do you just make it like a free trade where everything's privatized? Hospitals are all privatized. Public roads are privatized. Like, every single aspect will basically be run by a company, privately owned company, trying to make a profit. And you'll obviously get your fraudsters, you'll obviously get people with corruption, but you would think over time those would get weeded out, and then the best public companies would stay. Like, if you had a private company, that was in charge of all healthcare in South Africa, for instance, it would be expensive, but it would be better than, let's say, what the government can do, because you know that their aim is to make a profit. So they are going to, like I said, obviously there'll be people with corruption and overpriced and this and that, but over time, money talks. So people will end up going to the one that's maybe the most, like, I guess, trustworthy or whatever it is. But like, that at least takes away the power from the government and saying, hey man, every single thing here is privatized, whether it's are the roads fixed? Is there public education? Is there public healthcare? But then it goes down to money again. It's like it should be a free trade, like where you basically anyone can open up any company, take the power away from the government, because they're not doing it right anyway.
Yes.
They're saying, oh, we'll give you this, we'll give you that, but like along the way, somehow the money ends up in their pocket. Well, exactly. You have a free market where you can compete, and it's like, okay, well, the guy with the best plan is going to win. Someone wants to charge you 10,000 Rand for school, and someone else says, well, we can give you just as good and we'll charge you 3,000 Rand. People are going to go to that guy.
Yeah.
He doesn't have to make, his profit margin doesn't have to be huge. It just has to be 1%. But if everybody uses it, that 1% becomes big.
The only issue is that the government won't want to relinquish the fact that they need to pay people less tax.
Not.
They'll still want their 40% tax or, their 30% tax for doing absolutely nothing, even though now they've shifted all the work to the private companies. So that's the only issue where is to say that, I wouldn't mind paying.
It would have to be a tax-free society.
Yes, I wouldn't mind paying an arm and a leg for, discovery just so that my Medicaid is done. But the thing is, it becomes expensive when I also have to pay tax on top of it because I can't trust a government institution or hospital. But then you're like, well, why am I paying so much tax money if I can't trust a government hospital or institution?
Yeah, well, that's the problem, and they'll never give it up, though. I can't see that happening. Like, if they decide to go that way, it would there'd be a few bumps in the road, and the first 10 years might not be as good as they should have been, but eventually, once people do compete for things, and the companies that are fraudsters will be seen out. Some people will lose their money, unfortunately, but it will, I don't know, I feel like, obviously, like I said, communist countries are bad, but are they better off sometimes? Like, if you're a normal citizen, like, sometimes you might be a little better off than living somewhere, like, where the government is in control. Well, not in its control of everything, because that's obviously a communist country, but you just can't trust people. They're just too corrupt, because you give them the freedom and you have your freedoms. The government will provide your hospital, but then if it's not good enough because they're corrupt, then you have to pay medical aid. Whereas if you're in a communist country, it's like, well, that's that, man. This is the hospital you have, and you better pray to fucking whoever you pray to that they actually did their job and got the right doctors, and it's not a bunch of fraudulent nonsense. But
can you live like that? Because
it's
not every communist country is the same.
You look at North Korea,
for example,
compared to South Korea.
It's tough there.
Yeah. So, and that's the thing. If you do give, like, power corrupts, or absolute power corrupts, absolutely. So, it's an old saying, and it still beckons to be very true nowadays. So you either need to have someone that you really trust and that is actually for the people, if that's the case, or then you go to a free market and you let the people sort it out. The cream will rise to the crop or to the top eventually.
Yeah, I also think that many African countries are actually communist countries. They're just not open about it. Because if you look at countries like Uganda, where the president has been there for 34 years, there's been no economic growth. People are not able to access certain services, and also they sell privately owned land to foreign investors. And you are removed by the military of that land. When I see countries like Equatorial Guinea, where the president spends more time in the U.S. than in his own country, the country has one swimming pool in the whole country, and money from the oil reserves, the country grew by 300% in 1 year. But people got more and more poorer because the money from the oil reserves is paid directly into the president's personal account. So that tells you that, it's literally a communist country, but they say they're democracy. So, the whole point is that what actually differentiates, I think, for example, like Nana just said now about governments and not being competent around the world, and you yourself, Keegan, has just said now in America, all over the world, the governments are not competent. I think if the policies of the country enable someone to be able to save more money or be able to access the market, it's better than having a corrupt government with limited fiscal policies where your taxes are so policed and everything is done in such a way that you're not able to escape. Because either way, the government is tyrannical, and then number two, the policies don't favor a free market. It has to be one of the two.
And that's
America
the thing,
was good at that in the days.
if they do, if you are able to put more money in your bank account, whether you decide to invest it or spend it, if you didn't pay as much tax and you had more money at the end of the day, like it's cycle. You don't keep the money. You don't. It doesn't stay in your bank account. It's yours. It's kind of a like semi-permanent thing that you hold. Like you are going to use it, and if you have more money in your bank, the more money you spend naturally. And
Yes.
that's the whole idea, I guess, in some of the states here in America where they don't charge you income tax because they realize, well, if we don't charge you income tax, you will naturally spend more money, and we will get our money back from sales tax.
It's clever.
Whether
And
it's-
not only that, you grow the economy too.
You do,
The money's
because
not going to the government. It's going
exactly.
to business.
You have the money now. Oh, you know, Kojo, you want to open a business? Okay, cool. You opened a business. They didn't charge you income tax, so now you have more money. Like, well, I'm going to open a second business because I'm doing well. But if you're getting income tax, it's like, well, I just make ends meet. I guess one company is good enough. I might have to get a second job, and it's like that's not economic growth. And like, and you can see that's why a country like South Africa does struggle so much, because we get income tax and then we have to pay VAT, and it's like there is just no extra money lying around. Like I even speak to my dad about it, and it's always like, oh, we just barely made it through, and you're like what kind of living is that?
Yeah.
And the country's only going down. Like
They want you to.
well, yeah, they don't. Yeah, they want control, but it's detrimental to them in the long run. But again, people don't think about that. They think about today. Do I have food in my fridge, or do I have a Mercedes Benz outside of my house, or whatever? Can I go and spend 50,000 rand on alcohol and live like a king? Like it's all about today. There's no future. Like there's no foresight in the way they try to build the economy. Like I'd love to see the stats on South Africa about in the last 10 years how many new businesses have opened compared to how many have closed. Like
So stats wise, during COVID, about 33% of small businesses have closed to medium-sized businesses. The salary threshold, I mean, if you're earning 19,000 rand a month, in the top 10 richest people in South Africa.
Don't 10%.
And I mean,
that's crazy.
that's how far it goes. I mean, if you want to be top 1%,
It's a
you need to
million
earn
rand.
about 152,000 a month. So about top 1% is pushing it a bit. But I mean, in general, there's no disposable income. And like I said before, or actually like you said before, the government loves pension funds. The reason why the government loves pension funds for teachers, for the public sector, because I mean, they invest on your behalf. You have limited control over it. The reason why they love that is because they borrow from them at 2%.
Sure.
Right? So you're the person in charge of the funds that invests for you. Instead of him investing in stocks that are lucrative or other kind of investments that would boost up the portfolio, the government, who's in charge of the pension funds, borrows to itself at 2%, right? So I mean, that's why if you work in the government sector, when you retire, you'll see that what you paid, what you got, the capital gain, I mean, the compound interest on that is not so high. You could have put it in another, let's say, investment and made double the amount of money. How can you be getting 1.3 million after retirement? You've worked 30, 40 years in government sector. How is that possible?
Yeah. No.
But I mean, because they literally borrow, they're finding a cheap way, because they know if they borrow from the private sector, the banks and so forth, it's going to become a bit more expensive.
Yeah.
And they don't want to take foreign loans. So what they do is that they just borrow it from the pension funds. And a situation happened in the Northwest last year where the government had borrowed money from Northwest teachers' pension funds. And now people want to retire and are unable to access
Exactly.
the money from the pension funds. And now the new rule that they implemented now in South Africa, that before you leave the country, want to leave the country permanently, you need to give them a notice period of, I think, 5 years before you can access the funds from your retirement fund to leave.
So they can find your money
country.
for you.
So I mean, I want to move. I mean, and that's your money that you've invested, and that law has been given to private companies like the Allen Greys and Investex, those who do private sector investments. I mean, that has nothing to do with the government, but you cannot access that money before you leave.
Yeah, that's crazy.
You see what I mean? It's not just
But
a law.
that's the thing. They're exploiting
It's
you.
crazy.
They're exploiting you so that they can use your money, and it is actually fucking ridiculous.
And the policy is there to make them thrive instead of their own people. So why are
Don't
they
forget,
actually there?
Those 5 years, your money will grow, and then when you withdraw it, they're going to tax you on that money before you
Oh
leave.
yeah. That too. No, I mean that's the thing, man. This whole financial institution, like like I said earlier, like they've set themselves to keep. They've made it in the way that they can make the money. Like you're just a pawn in the game. Like that you'll make a little bit of money, but at the end of the day, they're the ones benefiting from it. Like it's your money, you've put it away, but you get your few percent. And the rest, like any other, they use your money and they make money off of it, man, and they just give you the bare minimum.
And then they live a lavish lifestyle.
Yeah.
Thanks to you.
Yeah, it's and I think people, that's the beautiful thing about the internet is we can be educated so, I guess, highly in the aspect of what's going on, what are the policies, what are people doing with our money. There's whistleblowers. There's people, like, if you see something wrong, you can put it online and the whole world knows about it before the flipping morning coffee, And I think the more and more these stories come out and things get exposed and government agencies get made out to be like, well, not to be what they really are, people will eventually get fed up with it and be like, well, I'm actually just going to be in control of my own finances, and I'll rather take the chance and have 100% control than be part of the scheme where you're actually just benefiting the big man and you're just being used, really.
Okay, have you guys heard of infinity banking before?
No, give us
No.
Give us an update.
So what it actually happens is that it's a company in America, a few companies, and they work with insurance companies. So let's say your life insurance policy is, let's say, $10 million, whatever. When you die, that's how much your family gets. They allow you to access that money immediately because you're insured against it in the future. And then you have to pay your insurance policies normally. But they have a way of, so how they work is that they give you the money up front, 10 million or so, because that's how much you'd have made, that's how much you'd have gone if you had died. So you get the 10 million up front. And then you pay your insurance premiums on it. But they also have collateral contingencies as well, that when you do die, this is how they get it back. But it's basically a way, the concept they're working on to forward your retirement, your money that your family would have received if you died, your life insurance money, but forward it to you before that, and makes you become your own bank. Nelson was telling about it actually. So you become your own bank, basically. So you're not really limited to what the product offerings of the banks that we have now, because banks are actually the worst place to invest in. I mean, I remember when I was in Queenstown one time, like some years back, and I wanted to find out about I saw Standard Bank advertising a platform to buy shares on the Standard Bank app. When I went there, the guys didn't know what I was talking about. I showed them their own advertisement on their site, and they didn't know. So it means that in South Africa, the problem, I think, also among the youth and people under the age of, let's say, 40, is that people are not really concerned about that. We have kind of shifted towards a culture of just partying and, not thinking about things like investments and so forth. Because, if you're not getting the financial literacy, because let me tell you, at university level, you learn about these stuff, but you actually don't learn about the real stuff of investing.
Sure.
So you learn about the theory of it, but many guys who finish, let's say, the accounting degree, when they finish it, they cannot sufficiently compile financial statements. Many of them cannot, but they'll have the degree. Many of them study investment banking, but ask them about investing, they don't know anything. So it actually tells you that most of the knowledge that you learn is actually the knowledge that you want to acquire, whether reading a book, whether reading online or so forth. Because, ask any of your friends that study, ask your financial planner friends. They're not really trained to analyze the markets. They're trained to sell you products. That's what they're doing. So, if you ask them about the actual composition of this product and what influences the trend, the market trend and so forth, they can't really tell you. Because, if that was the case, most of them will actually be very wealthy and not really working in private sector. But the fact that they're still there tells that they're not really people who actually know how to make money. They just know how to manage your money. And what they do is that they don't try, these companies, they don't try and grow your investment. They try to limit your risk. That's what they actually try and do. So they won't try and make you the 30-40%. They'll make you the 10% because it's safe. They limited your risk. They won't shout at them. Some companies are even giving you 6% return per annum, which is ridiculous.
Yeah.
People are happy. because people don't know you can make more. People are very scared. They know that if they're scared that they invest or lose all their money and so forth, because people don't know about risk, how to limit the risk, how to do all these things. They don't know about that. It's not taught to people. People just hear about investing. I mean, if you look at most, let's say, a lot of, if you look at South Africa, a lot of people are selling Herbalife and Avon, all these products, in the aim of becoming financially free. And I mean, we all know about the truth. I mean, that it's not really going to make you financially free. But everyone wants that dream, but they're not willing to put in the knowledge. I mean, the time, sorry, to get the knowledge. They're not willing to put in the time to get the knowledge to learn about how the stock market works. You don't have to understand it to the T, but you have to at least know where to put your money.
Sure.
You know what I mean? So that's a major concern.
Yeah, I mean, that's the thing with those guys, stockbrokers. I mean, it's like you said, if they really understood it, it'd be a 10-year career.
Yeah.
Do it for 10 years and they'd retire. And they'd be like, cool, man, I made my money, I'm out.
I know how to make money too, like that, yeah.
Yeah.
That's
But
what I do, trade.
for them, it's literally it's the commission, and that's what they live off of. They'd rather be safe and spend all their time educating themselves on a safe bet and get your commission, rather than actually, like, I mean, I don't understand it to the point you talking about it, like, but, you know, obviously you've spent a few years, like, and you've knuckled down and learned and studied and found what to look for and what not to look for, and, like, yeah, it's difficult, because you'd think that if someone was like that, again, going back to the whole Wolf of Wall Street thing, like, if you make someone a lot of money, you'd think they'd come back to you and be like, okay, well, here's actually a lot more of my money, and you'd make more commission. But I guess, I don't know whether it takes too much time, or if it's too hard for them, or if it's just too easy for them to get 1% from everybody, and they make commission that way. It's like, we'd rather get a little bit from everyone, and that makes me enough money, rather than actually really doing a good job and maybe only getting 5% of the business numbers-wise that you would, but you're moving a lot more money.
No, it's incentivized for them to say that I can guarantee 7.5, and that's sort of the bare minimum that they have to make, knowing that anything north of that is theirs.
Sure.
So it's in their best interest to
Like I told you.
Yeah. It's in their best interest to say, okay, I can only offer you 7.5, and then they know, obviously, that's the deal at the end of the day, and it's one of those things. If they have to phone you and tell you about all their products and marketing offerings, at the end of the day, then you must know it's not really a good deal, because the real good deals, people keep quiet about those things. That's why I'm saying that in terms of investing and stuff. And I'm not to say to say anything bad about Robert Kiyosaki or anyone that writes financial advice, but at the end of the day, that's how he's making, not the only way he's making money, but he's making a big chunk of money selling that advice at the end of the day. So he's telling you about it, making you aware of it, but that's also, what does he do with that money? He takes that money and puts it in the stock market. He's not going to teach you how to invest in the stock market. He'll tell you it's important. He'll tell you about all the things around the thing, which is also a good thing. That's what I'm saying. I'm not going to bring him down, because I've also read that. I've also gone to a conference with my brother and my mom to see Robert Kiyosaki. But still, at the end of the day, it's like, if someone is telling you about advice or giving you that advice, at the end of the day, you must realize that as much as they are giving it to you, they're not telling you everything. They're not telling you exactly what it is that they do at the end of the day. I think also Koji also touched on...
No one will tell you.
No, definitely not. I think Koji also touched on the fact of, platforms for stock exchange. So I remember the first time that so the first time obviously was this Old Mutual, and then I think there was also the Liberty group, or is it Liberty? I think it's Liberty.
Yeah, Liberty. Sanlam, Liberty.
Yes. Yeah, some guy which really came there and really tried to like negotiate that I must obviously sign up with them, add a bit of money into contribute and obviously and stuff like that. And I was just like, I'm not on this thing, or I'm not for this thing, or I can't touch my own money, or I must get penalized for it. So then I think there was some investment guy that came to Richards Bay, and I heard of him through a friend, one of the guys that was actually on site with me. He did Forex, so he was into foreign exchange. And how he got into foreign exchange was first by starting in the stock market. So he started in the stock market, made a bit of money, but he liked the volatility of the foreign exchange. For him, he had a lot more disposable income because he was left with a house and he had some things sorted. He basically paid off a lot of things very early, and then now he had this disposable income and he really wanted to accelerate his obviously financial journey. So obviously we're chatting to him and stuff like that. He told me, this guy, I think his name was Sponiso, he's coming into town, or it was in a town nearby in Bangeni. And my friend's a colleague of mine and also a friend, Tremaine, her husband, and we went down there to this thing. And he never told us about easy equities or anything like that, but he basically wanted to give us just a brief breakdown, and like it was nice. It was maybe an intro course he would like to say how it is that you start investing. So he showed us obviously in the newspaper where you see people are listed, or at that time obviously where companies are listed, how it is that you read that, the value of the company and stuff like that. And he was telling you, okay, where did you shop today? And do you know that you could actually, instead of buying, those tackies or sponsoring Nike that way, you could actually use that money to invest into Nike shares, and obviously as the company goes up, you go up in value, and then that means you can buy more of those things. So that was actually really good, and I think at that time he was really talking a lot about gold stocks. So like he was just like, oh, you want to buy gold, and all of you guys think that you physically need to go buy gold bars, but what about the companies that mine the gold? So he told us about Anglo Ashanti, about Sibanye Stillwater, and all these other I would call them low cost shares that you could get into. But he didn't give us the more of the, I think, which is something we'll talk about just in a bit, is the psychological factor of what it takes to actually be in the investment market, things that you need to put into place so that you don't get worried when you go through dips and valleys and stuff like that. But after that, it was like, okay, what's the platform that you can go use to invest in these things? And obviously the banks are the first people to say, hey, come invest with us. And I still remember with FNB, it was something like you have to have a minimum of $5,000 in your account. It must stay in there. Then anything north of 5,000 Rand is what you can use to invest. So you have to have 5,000 that always sits there. Then if you have 6,000, that means you can only invest 1,000.
The margin.
Yes, you can only invest 1,000 Rand. You can buy all these stock exchanges, and then on top of that, every time that you want to buy for something like 110 Rand, every time you want to sell, there's also a transaction on that. And at the time, I was like, okay, it makes sense. It's your first time buying into this thing. And then eventually, I was like, I think that's when I met a friend of mine who was also a financial advisor in Richards Bay, and he was telling me how he uses easy equity. So I was like, okay, fine. If I wanted to trade this, how much would it cost? And he was just like, no, if you're buying 10,000 Rand of this thing, it would be like $230 or something like that. So I was like, for that transaction completely. And he was like, so I was like, okay, it was expensive. But I think it was when I was like doing the smaller values, because obviously if I was doing only 1,000 Rand, I was being charged 110,000 at Standard Bank. But on easy equities, that's almost like $16 or something like that. And I was like, so these guys are really overcharging me, and they don't even have a really good platform or anything like that. And I think we were chatting with another guy. We've got a little investment group that we have on WhatsApp, and I was actually chatting to this guy, Alex, and he was telling me how he uses Standard Bank. So I was like, what's your transaction cost? And it's like 160 Rand just as a brokerage fee to make a transaction, to buy a share, 160 bucks. I was like, I would rather get that. Yeah, that's 160 Rand of a fractional share, or depending what it is that you're buying. If something was,
It could be a entire share, yeah.
Penny stocks, you're literally buying 15 of them.
Yeah, that's an extra 15 shares on penny stocks just for a transaction fee. So because of your lack of knowledge, they will keep on milking you. They will keep on milking you up until that point where everyone realizes, okay, let's pull out of Standard Bank's investment platform, let's all go to easy equities, and they'll be like, well, why are we losing so many people? It's like, well, you can't be charging that price. You can't be charging that price and letting people be happy with
it. Yeah, I mean, that's the thing.
Have you used easy equities before?
I haven't, no.
Your ETFs are also on there. So you talked about your Vanguard. Vanguard is on there. Your Vanguard funds are on there as well.
Russell.
So all your ETFs are there. Crypto tokens are there. You can't buy crypto individually, I think, but you can buy it on the other platform I mentioned. But you can buy a token. Like I told you, my token is made up of 11 different cryptocurrencies. I did about 345% growth. Okay. And I mean, it's good because the platform it's easy to use. If you want to buy shares, they give you 2 accounts on the platform. So if you want to send money if you want to buy US stocks, you can just transfer money to a USD account on the platform and then buy your US accounts. You can also buy fractional property shares if you want to. They have a property platform on there as well. So it's quite extensive, and it's really good because I mean, I know you, at a stage you're into property and such.
Yeah.
I know South Africa, the property market is not really great, and you know Robert Kiyosaki's model of property is a bit. It's good. It's maybe all right if you live in America because I mean the interest rates are probably lower than South Africa. I mean
Sure.
South Africa, the rates are 12.5% prior to COVID, and now they're about 8 or something percent. And I see Standard Bank is literally been going through the most, and FNB with the legal lawsuits against them because of changing the interest rates within contracts for people that have property. So like one guy sued them for 800,000. I mean, I saw like a few months ago they had 248 cases against them. So all these actions of changing interest rates, we won't even notice it. The property market is hard because if I buy an apartment for 1 million and I pay 12,500 rand a month to the bank for this, excluding maintenance costs and other costs
Sure.
that come with it. And I mean, you probably know more about those. I mean, am I really going to get a tenant? Because I mean, nowadays 1 million will probably get you an apartment in Joburg maybe. You won't even get you a
Sure.
full house like you do. Who's going to pay now that 15K for me to make an
No,
actual small
sure.
profit? Who's going to pay 15K for a 1 or 2 bedroom apartment? It's not going to be really feasible. Am I really going to be making 1,000 rand profit? So basically, I'm literally making less than 10% return per annum,
Yeah.
probably even 5%, 3% maybe.
Yeah.
I'd rather
yeah.
I'm all about the returns. I'd rather put that
Sure.
money in the property, in the stock market where I can get a 30% return. Because I always tell people, it's not about the amount actually, it's actually about the percentage of growth. Because I mean, that 100 rand can get you 30% return. That's good.
Yeah, no, for sure.
You're not going to make 1,000 of 100, like some people want you to believe. You're not going to do that.
But it is, at the end of the day, it's your profit margin. Yeah, it's a percentage of profit that, because like, yeah, I mean, I've done all the numbers with my house. Like, I got a house in Joburg, and like, I know that I could definitely make more if it was on, for instance, you put the money into stocks and that. The only other thing is, and obviously you own the asset, and if the asset appreciates,
Yes.
you know, which it takes time. But then again, if you look at South Africa's property market at the minute, it's not great. So, yeah, I've definitely dabbled around with like selling it and rather putting the money somewhere else. And profit percentage wise, you could definitely make more money. Well, definitely, but you could make at least double, you know, percentage wise of what you're doing with the property. So, no, I haven't used it, but I will get onto it and have a look. Because it does sound interesting. I've been trying to find like the easiest way to basically, because obviously in America there's a bunch of them, but you've got to be
Yeah.
American citizens and
Yeah.
blah blah blah. So I'll definitely
Yeah,
get
South
onto that.
It's easy. I mean, your email address, your tax number, and you're literally in. Also,
Yeah.
another thing about property in South Africa, if you can sell your property at a good price, I think you should look into it because the middle class of South Africa is collapsing quite rapidly. And that means that people won't be able to afford the rentals that you're putting out there. Because, I mean, when you say if your house is worth, let's say, 10,000 a month in rental, people will be saying, can I have it for 6 because I can't afford to pay 10,000 a month.
Yeah.
That's what's going to happen.
Oh yeah,
with
no,
the
I've definitely seen that over the last few years. So like, yeah, like my house is currently on the market at the moment. So I've definitely put thought into it, and I was like, well, maybe property is not a bad investment, but property in South Africa is probably, at least in the last 5 years, it's been like, okay, maybe it's not what it should be, or it's taken a bit of a dive. You know, it's obviously going to go one of two ways. It's either going to go up or it's going to go down. And I think it's definitely gone down. But that's the other thing, man. Like, you learn a lot getting into stuff like that, and you know, it's experience that you'd never have unless you physically did something like that.
Yeah.
Like, I've definitely learned a lot about the property market and all of that, and it'll definitely hold me in good stead for the future wherever I decide to settle down. But yeah, I think with the whole property thing, it is difficult, especially with the, like you said, the interest rates changing. And I mean, I've had it a few times where FNB have sent me a message, oh, interest rates dropped or interest rates gone up or whatever, and and then you look at your rent and you look at what you're paying the bank, and you're like, yeah, they're definitely winning. Like,
I'm making a loss here, yeah.
oh yeah, 100%.
They will never take the loss. It's always going to be at someone else.
Yeah.
No, because overall, though, when they take the money from the mortgage over 20 years, that have made triple, way more than.
No, I've
so
calculated.
it's,
Like, that's my thing though. I've got like two options. Either pay it off over the 20 years that I took it out, or I could pay it off in a year. Like, I have the money to pay it off in a year, but it's like, I'm at the point now where it's like, do I want my money in, do I want to have that much of my money in and stuck in South Africa? Like, then you're going to sit with the house on the market for a few years, and so it's almost like I've kind of just decided, well, we'll sell the house, not putting anything into it, get them...
Invest the cash.
Yeah, exactly. Like, I know if I sell it, I'll definitely make, from what I'm asking for it, I'll make money on the whole deal, and then just be done with that, and I can put it into like stocks or something, because like I said, you could pay the house off and get it paid off. I mean, I could do it pretty quickly. Like, within under a year, I'd have it all paid off. But then again, you sit with your money tied up. It's in an asset that isn't really going to make you that much money. So, yeah,
And
like I
tax
said,
on that as well.
yeah, and then obviously and then the other thing is when you sell, they'll charge you. You get capital gains taxes and all that. So it's been a good learning curve for me. Like, I haven't lost money, but I wouldn't say I've made a bunch of money either. So,
And
you know, no harm, no foul, I guess.
You've just lost hair during the process.
All
You
of
know, it's
my hair.
crazy. It's crazy how when you ask these property guys, they're always telling you it's the best time to buy a house now. It's the best
Of
time to
course.
invest. Like, you know the saying that says, never ask a barber if you need a haircut.
Exactly.
I mean, at the end of the day, they always tell you it's the best time to go in right now because prices have just gone down. But, you know, these people, like I said, there are many people who are walking around like experts when they're actually salesmen. They're not experts.
Yeah.
They don't know what they're talking about. If you ask
Sure.
the agent about the economy and how come the middle class is shrinking and how that's going to affect you, they won't know what to tell you.
No,
You see
but
what I mean? So if-
they'll sell you a house before you...
They'll sell your house.
Yeah.
And that's what happened to the 2008 crash in America. But if I were you, Keegan, if I could sell the house and get the money, I think I'll put a portion of it in a safe investment just to hedge it properly, to
Yeah.
not take on too much risk. Maybe a big companies like Allen Gray can give you a good 15% return just to keep it safe there and in line with inflation. And then the rest I'll dabble around in the stock market. I can make
Well, that's
some good profits and
that's
so.
basically my plan. Like, I've got a percentage of whatever money I have that'll always be in crypto. Like, I've just made a decision. Like, I'm going to be, out of all the money I have, I'll have a certain percent of it in crypto regardless. And the rest of it, then it's going to be spread out between, basically stocks and all of that kind of stuff.
So like for me personally, there was a time when last year Bitcoin price rose significantly, and what I actually did was quite clever. That I read a story about a guy who used to loan money from the bank and beat the system, right?
Yeah.
So I took and cashed my credit card just to see what's gonna happen. Put it into my crypto wallet, and for a straight week I was making like $2,000 a night off of crypto. And then when I made enough, I took it out and put the money back in the credit card. And then
And you had a bit of extra.
Because my strategy for that would be to keep a base amount. I keep a base amount, and I
Right,
take out
so you
out
sold
the
enough to pay
profits.
the credit card off, yeah, sure.
I just take out the profits from the actual base amount. So I'll keep a certain amount there. Whatever I make
Sure.
on top of that, I take out. So I literally minimize my risk because with what I use Luno. When I started off with Luno, before I had VALR and so forth, with Luno, you don't trade the Bitcoin prices like many people do. They lose a lot of money like that. You actually buy the Bitcoin.
Right.
Buy the Bitcoin. So if you can buy 0.001 of the Bitcoin or
Yeah.
0.01 of the Bitcoin. So you always have whatever the price of the Bitcoin is. That's how much you have in relation to the total amount of Bitcoins. It's like almost like fractional investing. Same
Yeah,
thing.
yeah,
You're doing a fraction of the Bitcoin.
sure.
And I mean, Paul Hawker and Mr. Hawker's other son, Paul Hawker and James Hawker, they actually work at Luno.
I know Paul
Bitcoin,
does on the legal side. I'm not too sure about James.
Yeah, the legal side with compliance, yeah.
Okay.
So I mean, that actually made me a bit more comfortable. Get my money.
Pull my
So
paper, like, hey, come give me my money back.
and they've expanded quite well. They've got a massive building in Cape Town now, Luno, the company, and I mean, it's very easy to actually. It's very easy to actually transact with Bitcoin because I mean, you know, there are two types of investing actually, because some people trade the prices. right? Almost like options and so forth. So people actually like they short the market, they go long, and that's where they lose money. Because like I told you, the reason why these guys make money is if a stock is $50, I could dump 15 million rand in that stock, right? And the market will never close my position because there's too much money in there. I can survive the turbulence, the volatility. So eventually, whether I'm going long, going short, whether it's in 1 year or 2 years, I'll make the money back. It doesn't matter when. It's not a matter of if, it's a matter of when.
When, yeah.
But then if I come in with my 100 rand or my 200 rand, it's going to blow me off the market. You're literally gambling because a small volatile change can literally just blow you out the market immediately.
And that's what
That's why
trading,
investment companies, they pay 7.5% because they're not telling you that these forex guys are not telling you need to have a lot of money when going in. Because when you don't go into a lot of money, the market blows you out. You cannot be actively trading like that with 1,000 rand or 2,000 rand. You need to have 150,000 or so. So when you have, and you're it depends on your leverage as well. Something called leverage that determines how much money, how for example, when the frequency changes or when it's more volatile, it determines, for example, how much you actually lose. Because if you go into low leverage, it's different from going into high leverage. Different stocks like Facebook have different leverages when going in. So I mean, your blue chip companies, Facebook, Apple, and so forth, and those other companies, when you go in there, you have to have a lot of money. You make your money if you have a lot of money in there.
Yeah.
Eventually.
Sure.
That's what they don't tell you.
No, sure.
So,
and I think even this week, Koji would know more than Keegan would. We've been chatting to a lot about penny stocks, and I never really looked at penny stocks because one, just that you don't really see them move much and anything like that, and no one really speaks about it. But one of my friends, Alex, his dad, for some reason, not for some reason actually, like that's all he does. He'll look at companies which are around less than 5 rand per share, and the guy made quite a killing on, if I'm not mistaken, it was ACL or PPC Cement, one of the two, ArcelorMittal or PPCL.
both of them actually.
Yeah, and I think he bought like 400,000 rand worth of these things, and he bought them at 1 rand 50, and that was 6 months ago. Now they're sitting at 3 rand 50 or 3 rand 80 or something like that. So the guy's basically, 2.5 times what he put in. So he's made a few million rand because he was just able to buy so many of these cheap stocks, and meaning that once the price goes up, because it's just so cheap and he's got so many shares, he will be able to make a ridiculous amount of money. But even in that sense, like, I think anyone can, obviously, we've spoken about the fact that anyone can get into stock market and should be in the stock market and stuff like that, if you can afford to. But I think one of the most important things that I realize that from the psychology of money is having a mindset, or the psychology where you are prepared to go on this journey. I think also what I've also started to see is that you do dabble with small things, and it's always good to start with like $1,000, $100 here, $100 there. But when you see it move up, you only make maybe 20 something rand profit or 12 rand, and you're just like, if there was more money into it, that's where at the end of the day, the more you put in, the more you're going to get out, right? But what made you? I think there's definitely things like people's risk profiles, and that's what some of the conversations you have with a financial planner or analyst, where they'll say, well, are we looking at aggressive stocks, or are we looking at moderate stocks, or are we looking at low risk stocks at the end of the day? But in terms of crypto, obviously there's a lot of volatility, and that's something I haven't touched. Even with me, just because I've got a low risk profile, probably comes from me being an older child. Kojo's definitely got a higher risk profile. You both of you actually being the younger brothers have higher risk profiles. But even in that sense, what makes you? I won't say what makes you comfortable, but do you not see? You obviously are aware of the fact that there is a risk that you could lose everything at the end of the day. That the stock market could tank, or your cryptocurrency could not be valued, or the value of it goes down. What makes you? Was there sort of? Did it take time for you to become comfortable with it? I think Keegan, you obviously mentioned skin in the game. Was it a gradual process, or did you just jump in with both feet? And then after
it was definitely gradual. Like in the beginning, it was just like, okay, well, let me put like a few $100s in just to make myself, kind of comfortable with the process. How to move the money around, to be able to get the cryptocurrency onto a hard drive or a hard wallet. And then after I did that, I was like, okay, cool. I can see what I've bought. It's in my hand. I'm physically holding it in my hard drive. And I can put it on my computer and I can see there it is. I can see how much it's worth in dollars wise. And after that, I was just like, I just thought, well, yeah, first, like I said, skin in the game, but then I also, I think, yeah, I just got more confidence behind the fact that people were going to just have faith in this cryptocurrency. It's not going to go away because I think there's enough people and more than enough money in it already that I don't think someone can just say something and it'll get banned. Like, there will be quite a backlash. And then again, also with things like Metaverse coming out and you see more platforms being able to make it quite easy for you to spend this money, transfer this money, and it's, it just made it a lot more, it's still not very user friendly, but it's getting there. And, at that point, I remember Bitcoin dropped by quite a lot. I think it was down to like 30 something thousand. And I thought, okay, well, it's probably not a bad time. I think Ethereum was just over maybe like 1,200, 1,300. I was like, well, get in now, it'll force you to pay more attention to it. So I put a little bit more money into it, and then obviously just watched it, and then gradually I just decided that, like, the money's in my hard drive, it's not going anywhere, like, this is a real thing. So I think I got a bit of confidence from that, and then I made a decision one day, I'm like, well, I'm just going to have a percentage of my money in there all the time. Like, I'm going to take a percentage of whatever my wealth or my, whatever you want to call it is, and I'm just going to have it in Bitcoin or in crypto in general, like, just to, kind of put your eggs in different baskets. It's the same with, I guess, the stocks. Like, I'll start off getting something low risk, and then, or I did start off like that, and then, like Kojo says, if you can pay more attention and read the right things, then, you can make a little bit more high risk ones. And I'm not quite there yet, but I mean, yeah, like, the other aspect was it's sitting in my bank account. What is it doing? It's not doing anything for me there. Like, I always have a thing of thinking, like, I need 6 months of living costs in my bank account. Anything other than that is not disposable income, but it's investable income. Income that, I don't need it within the next 6 months of my life. So wherever I invest it, as long as I can get it out at some point, that's fine. And like Bitcoin or cryptocurrency, that's why I decided to put a percentage in there, just because I know that if things do go pear-shaped, like, I can get it out immediately, obviously. But it's also like, well, I'll have 6 months of savings and I can write it out. If I really need to take it out, I can. Like, you have the flexibility and the ability to just take it out if you need to. So it was just, yeah, and I mean, at the end of the day, we all want to, I guess, retire and be able to be financially secure and financially free. So, yeah, putting your eggs in a bunch of different places is definitely not a bad way to go about it. And I think for someone that is starting in crypto, like, there's no need to be skeptical, in my opinion. Like, obviously, if you look at over the last 6 months, yes, it's really fluctuated price-wise. But again, I don't think that's too much concern. Like, it's still at a market, they're trying to find the market price of it still. It's not there yet. And the fact that Bitcoin in particular, in the next few years, will be completely mined and there will be none left, the demand will go up. And every day there's new things coming out, whether it's Metaverse or Sandbox or whatever it is. You have these platforms that are being made for cryptocurrency with your NFTs, and so it's like, it's only going forward, which I think gives me more confidence to put more money in. So it's like, I think I'll always have a percentage of my money in there, and it's probably the same with stocks. I haven't gone as much as I would want to yet. Like, I'm still kind of getting comfortable with that whole situation. Like, you'd want to get a certain amount in a kind of low risk, I guess. But then, like I said earlier, now that I'm comfortable with what's in the low risk side of it, then you can maybe start paying a bit more attention and saying, okay, well, cool, if I lose this money, it's not the end of the world. Like, and that's comes down to, again, having disposable income. Like, if you don't have the money, then you will be a lot more skeptical. Or if you're very tight and you don't have, like, you only have an extra 300 or 3,000 rand to spend, like, you're going to want to put it somewhere that you're pretty confident in. And I guess I'm kind of at that point where it's like, okay, I'm happy with what I've got in the low risk side of things, and it's like now maybe time to be a little bit more explorative, or whatever the word is, and yeah, just play with the market. I mean, you don't learn if you don't try, really.
Kojo, on your end, what made you, I guess, what gave you the ability to sort of say, hey, you know what, as much as there's risk, this is something I'm willing to do?
I think it depends on how you view risk. There's something called risk management. You can manage the risk. So, for example, if I have a portfolio of 5 shares, or 5 stocks, for example, I need 3 out of the 5 to go well, maybe. Because I'm looking at the net, the average return on my whole portfolio. If I have 5 stocks, and 3 aren't doing so well, 2 aren't doing so well, but 3 are, then at least I make my overall, as long as I beat the market. So let's say my overall return is 20-something%, which is better than what I'll be getting at a bank or a financial institution. So I think in terms of that, how I structure my portfolio, that I'll have 2 companies that I know are blue chip companies that I know have proven, like let's say Tesla, for example, it's proven itself to us. I mean, over the last few years, that it's quite stable.
Yeah.
And I mean, you have one of those or 2 of those, and then you have a few other companies that you maybe 2 that are medium risk, not really sure where they lie, but it looks promising based on the financials. And also, I don't really look too much to the consensus as to what people are doing, because the consensus is not always reliable in terms of making financial decisions, because it just tells you that many people are buying this, or so you should buy it. I mean, if GameStop, the consensus was buy, right? Because everyone was buying. It didn't mean that was the right decision to make at the time. You have to look at the logic. When people are telling me buy shares in GameStop, saying GameStop, I was asking myself, why is the price of GameStop shares increasing? What is causing the increase? They've done nothing. There's no new acquisitions. There's no new capital investments. There's no strategic planning or any form of investment coming in. No projects that have been announced. So why is the price increasing? As soon as I saw it increase, I knew something on Wall Street is going on. But I mean, if you don't know that, you would assume that it's a good place to put in your money. And another thing that I also tend to do is that I don't really hold on to stocks like they're children. I'm willing to let them go after 6 months. For me, long term doesn't mean I'm going to hold the stock for 5-10 years. It means that I'm going to take out money and make better financial decisions depending on what the market does. The market changes every day. You need to be able to pull out the money, not have emotional feelings and attachment issues to your stocks, and pull out the money and reinvest them in companies that are looking promising. So there's something called hedging, where you kind of have an area of investment that is quite safe and risk-free, I would say. So for me, that has been kind of in cryptocurrency, where I saw, okay, right now, I'm not sure about the future, but right now it seems pretty stable. And I think people lose a lot of money because they go into crypto with this expectation that I'm going to make money tonight or tomorrow. And then when it goes down, let's say over a month or 2, they pull out the money, they make the loss. And by the time they wake up again, the price has increased. And crypto is 24/7. That's the problem.
Yeah, it's very versatile.
It's very versatile, but you can make your money on it. Because I mean, like I said, it's made 25,000% return since inception, and Ethereum has made 26,000% return since 2015. There's no investment that I can think of that can make you 25,000% return. And I mean, if you look at that, when you invest in stocks, you must look at the history of the stock. You must look at how it's performed over 5 years, 1 year, most recently 3 months, and 6 months. You must read up a bit of news about the stock. So I mean, people also need to understand that companies are not. I mean, they go through a lot. So I mean, the prices fluctuate based on demand, supply, and so forth. It doesn't mean that the price of a stock, because it's low. People like saying I'm buying the stock because the price is low. It doesn't mean it's going to go up. It could literally plummet. Look at Steinhoff. When Steinhoff shares are crashing, people are like, oh, I want to buy Steinhoff shares. What happened? A lot of pension funds have money in Steinhoff. You see what I mean? So for me, it's about managing the risk. I'm okay with taking on a lot of risk if I manage the risk and I can see reasonability behind my decision. I'm seeing that I have something to hedge it against. I'm not putting all my eggs in one basket, like Keegan said. And I mean, the reason why I like penny stocks is because these are companies that are not blue chip companies. I mean, the Russell 2000 index, for example, is 2,000 small cap companies. And these companies, what they actually do is that they are in the stage of scalability. So they're scaling. And because they're scaling, or maybe let's say they are established, but they're getting to the next phase of growth, they issue stocks at a relatively cheap price because they need to grow. They're not well known. And they need capital to expand. So when you get in there early, like any company, if you have an idea today, you're going to start a business, and you offer me, you need 100,000, I give you 100,000, and you give me 20-30%. When this company becomes a massive company, no one can come in 100,000 just 1%. They need to come in now with 3 million, 4 million, because the level has changed. So when you come into penny stocks, some of these companies, they will never grow to be big companies, but they have steady returns. They're less volatile. And some of them are still growing. So, I mean, you'll be able to make some money off of them. And also, because you can invest in so many penny stocks, you actually don't take a big knock like you do from these big companies where if Facebook is hit with a massive scandal or something, the price can plummet literally tomorrow. By the time you wake up, I'm not in America now, but I mean, by the time I'm sleeping, by the time I wake up, the market is already, my shares are literally, everything's plummeted. Whereas with these penny stock companies, a lot must actually happen for them to actually go to the brink of the share price becoming, worth nothing, basically. So I think you must have a fair balance of your portfolio, different industries. I mean, I had shares in MTN. There's a stage when MTN was actually, I was in the red. I was, I think, like 24% in the red. And I looked at some new expansion projects they actually had. Some guys I know, they sold their MTN shares, and I kept mine on for a good 8 months after that. And I'm on 50% now, plus positive.
Sure.
And I mean, Anglo Gold is 160-something%. I've had it for more than a year. So I mean, you look at the long-term view of it, and look at why. I realized that some of these companies, the share price was actually decreasing because of certain decisions they're making. Capitec, the share price decreased because the whole board resigned. I mean, when you see that happening, of course you get like, with South Africa, so you think, damn, okay, this is actually. Now it's the beginning of the end. But I mean, you actually look at why did they resign, what is actually happening, what technology are they bringing in. Capitec, I knew, is bringing this new technology to like they do in Asia, where you don't have a card anymore, you just pay. So you just show me a code on your phone, I scan you, and the money goes straight to your account immediately. You can pay at car washes, barbers, anywhere, it's cashless. So that new technology boosted up the share price, got new investment in, and they're back up. So I mean, you have to look at all these things.
Yeah, I think it's also like, I know my mindset was like, which is very conservative. Like, I don't know, I kind of felt like, I needed to have a certain amount of money, like I said, the 6 month, living expenses. Yeah. And then I would be like, okay, now I'm happy to spend the rest of it and invest the rest of it. That might not be the best way to go about it, because some people will unfortunately never get to the point where I have 6 months worth of living expenses in my bank account. But I don't think that should stop people from investing. Like, I'm lucky enough to be put in the situation where I could do that. And I think, sometimes you just have to accept it and just choose, man. Like, I'm going to put, even if it's 2%, and you just put it in like a Vanguard 500 or something. Even if it's 500 Rand a month, like, start putting something in, because like I said earlier, it's not about timing the market, it's about time in the market. And whether you want to be in control of it, like Coach just said, you do need a bit more money if you want to be more of a trader. But even if you're putting 200-300 Rand in a month, it's better than nothing, and that's a way to start, because it's being financially smart at the end of the day. Like, your money, you are almost guaranteed it is low risk and you will make some money on it. It's better than that 500 Rand sitting in your account. Then you're like, oh, well, I'm going to go buy a bottle of whiskey or something. It's like, just put it away. If it's not in your account, you're not going to use it. It's an investment for your future, and it's going to grow. So, I don't think, like I said, I know I'm conservative, and it was kind of a decision. Once I had a certain amount of money, I'd do it. But I think people should be encouraged to do it and kind of make certain adjustments maybe in their life if they have to, or just accept like, okay, 200 rand a month is going into this fund, and just do it.
I think
like that's the best way to do it.
The one caveat to that is that where I don't think it means that people shouldn't be setting up their rainy day fund. And the reason being not that it robs them the opportunity from investing. I think I'd rather have it that if you don't have, you know, your rainy day fund of 6 months of expenses, then okay, take a small percentage, at least that you can get skin in the game. That I understand. But the reason where I've seen that in books where they really explain this 3 to 6 month thing is that when these emergencies happen, that, you know, you have a car crash and you have to pay your what do you call this? Not installment, but whatever you call it, you have to pay your certain amount of money that you're paying for insurance, or something happens, car tires, or service that you forget. The reason, excess. Sorry, thank you very much. The reason why they say you should have that is that so that you do not cash out on your investment. By you having that 6 month there, it means that, I can leave my investment in, because as you said, it's about time in the market. You never want to disrupt it. So having that 6 months is really good, because it means that you don't have to go cash out on your investment. Because at the end of the day, when you need to pay that excess amount or something has to happen, you're going to look for where you have money. And if there's nothing in your rainy day account, the first thing that you're going to go towards is you're going to be like, I'm not going to take it on my credit card. Let me go cash out my investments. The issue with that is, one, you've obviously disrupted it. You don't have skin in the game anymore. You actually realize it and actualize it, meaning that now you also have to pay tax on that percentage of profit as well. So there is this incentive to having the 6 months, just on the pure basis of the fact that it leaves your initial capital, the amount that you have invested in the market for a longer period of time before you actually actualize it, before you have to pay tax, before you actually have to, you know, get it out. And once you get it out, it's very hard to put money back in again. So I think I strongly believe on the 3 to 6 months principle, just because of that.
It does give you like a sense of financial freedom, where you're like, okay, anything now I can put away and it's going to stay, it's going to be used, you know, for investing. And if I need to, then I have money somewhere else. Like it gives you a little bit of freedom to maybe be a bit more risky if you wanted to. Like a lot of people do think crypto is risky, but I'm like, hey man, I've got 6 months worth of living expenses.
Yeah,
I've got this extra money. I'm gonna put it in crypto and see what happens.
Yeah, it also gives you the confidence to be able to say, hey, I can actually put this excess money into the stock exchange because I do have my contingency plan if, you know, crap hits a fan at the end of the day. Right.
Sure.
But if you lose money on the stock market, I mean, then so what? A lot of people think it's the end all be all. I mean, if you do your planning well, you're not going to lose everything. That's people tell you lost money in the stock market, a lot of money. They went on, because, you know, there's something that I did when I was doing my certification was behavioral finance. Behavioral finance is very important because overconfidence can cause you to lose a lot of money. Emotions play a big role in investing. Because, for example, if I tell you, if you're desperate now to make, let's say you're in a situation where financially you're not really sound, but you have some money at your disposal. Let's say you have a credit card with 200,000 rand in it, but right now you're not working, and you're looking for a job, and things are getting tough. And I tell you, Keegan, look, at 200,000 rand, put it into this stock, and it's literally going to be the next big thing. Within 3 months, you're going to be pumping and everything, and then you, because of your emotions, you do that, right? And what happens is that the stock might not perform the way you thought it would, and now you owe even more money to the bank. And also, one thing you must understand is that when these stocks are not performing well, it's not always like a rapid decline, like you just wake up and there's 40% gone. It's a steady decline. You see a decline. You see it every day. Okay, like now I'm 3% down, 5% down, 4% down, and you know, you see it. It's really.
And it's not a big 50% in 2 hours.
No, it's rare that happens. I mean, that's when you're actively trading, like I told you about, like the Forex guys, that's when you get those massive knocks. But in general, what the general rule is that when you trade, when you buy these shares, you need to be comfortable to be able to not look at them for a day and come back and look at them in the evening.
Sure.
And that's why I like the process of actually buying and acquiring shares. I don't want to look at my phone 24/7 and worrying about the stock price and you know what's going to happen. Because I mean, if you have like a Bitcoin wallet and you can see the changes happening in real time, it can actually become a bit obsessive because you're always watching.
Sure.
Like when I remember when I was making that cash every night, like some nights I would wake up like at 3, and I'd wake up and because I have to take the money out and leave my base amount in.
Yeah.
So I mean, I'd have to like wake up at 3 and like, I mean, you just want to play a safety net, but I mean, you also have to be careful Like I said
Yeah.
to you, don't get emotionally attached to stocks. You're here to make a profit, not to feel like you must look at them. Most people want to feel like I own part of this company. And that's the wrong approach to actually go about it. You need to actually you need to actually think, how much money can I make from this company?
Sure.
Not actually, can I own part of this company? So I mean, when you go that approach, you learn that if you've made your money, you need to not be greedy. Set targets. I hope I can make 30% return in a year, right? Realistic. When you made your 30%, you can take the money out and take a break and look at what stocks to go into next.
Sure.
Don't be greedy now. If you made your 30%, it's good. Don't try now hit the 70, 80%, because yes, you can hit that maybe. By the time will come maybe where, like in accounting and financial management, you learn something. When I see a stock price increasing rapidly, like on the investment group that I'm on with my brother, there's one stock that one of the guys put up there. When I looked at that stock price and people are probably saying get in, that growth is not sustainable. So a point will come where it will decline because growth must be sustainable. It might just be a new acquisition or something that's happened in the company that's causing the stock price to literally rise and increase at that exponential rate. But what happens when that's done? When the acquisition is finalized, what happens after that? It goes back to its normal price.
Yeah.
But now you came in at the top. You came in right at the top. When it's going down to its normal price, you're literally feeling the burn. And nothing will actually happen again for a long time that'll take you to that price again. So you know exactly when to come in. Yeah.
No, I think we've covered a lot, guys. So thank you very much.